Hello there. I hope that you are doing well. Welcome to this new episode of the Uncensored series. Today we will be looking at an execution that took during the afternoon session on the 19th of July 2024. Let's begin. Here we're on a 1 minute chart of Nasdaq, and what you will see me do is the following. You will see me go long inside of this BC right here. The reason why I was looking for a long during the afternoon session was due to the following. Earlier on in the day, we reached our key sell-side liquidity objective for the week, meaning we reached the current July low. When we reach a higher time frame draw on liquidity, I anticipate that the afternoon session could potentially retrace or reverse to offer buy-side delivery next. The reason why I'm anticipating such is due to the following. When the signs become present that we're likely going to draw towards buy-side liquidity next, I anticipate that the afternoon session will deliver this. Why? Well, if we drop the whole morning session, who has been making money all along? Shorters, of course. So what liquidity has been engineered? Buy-side liquidity. Therefore, I was looking for signs to confirm to me that we were likely going to offer buy-side delivery next. Here you can see me go long inside of this BC right here, stop being below the low of the BC, and I anticipate big green candles to come soon. My eye is drawn towards this buy-side liquidity here. I was rather confident in the fact that this right here would likely be the low of the day and the low of the week as a result of that, since it was Friday, due to the following. What we can see here is that the launch liquidity, the launch cycle low, was purged by this move lower. Notice that from the 1 p.m. open we did one thing, and that was drop lower. That right there is manipulation to me, and therefore I'm anticipating distribution to follow towards the upside next. The BC I went long in can be seen here. The reason why I went long was due to the following. You can see inside of this low formation that there are only a few candles. After the recording is done, I will take you with me into both Nasdaq and ES and I will showcase to you what the intermarket relationship was showcasing to us. Here you can see me do my annotations and such, and this downcoast candle was a bullish order block. Why? It's due to the following. Notice that the delivery to the left here was rather slow. There was a lot of back and forth going. And then at 1:22 p.m. we have this sudden drop lower, this big downcoast candle, which purchased sell-side liquidity, and we then see a low formation taking place. We see SMT with ES taking place, and we then displace towards the upside. At that moment in time, I anticipate this downcoast candle to function as support on price. That by itself, however, was not enough for me to go long. Notice that there wasn't any real discount array which formed inside of this leg higher. It was just a lot of back and forth going. This is just slowly grinding higher. Why is this delivery so choppy, you might be wondering? It was because of the fact that we did not reach the right time yet for an expansion to take place. Therefore, when our macro window arrived, I went long inside of this BC. I waited for a retracement into it. Notice that we displaced to the upside. Let me just pause the recording for a moment because I need to really break this down for you. Notice that we displace higher here by this leg, trading above this upcoast candle. This upcoast candle set up the run lower. This is manipulation, which is taking place just in advance of our macro window. We then see a BC get created during our macro window. We expand higher, taking out buy-side liquidity. What do we do then? We retrace into a discount of the range from this low to this high to provide us with the opportunity to buy in a discount array in a BC. We then see something occur between Nasdaq and ES inside of this BC, the lower time frames, and we displace towards the upside again, trading above this sequence of downcoast candles, above this upcoast candle. Notice that a new BC gets created, and that right there was the reason why I pyramided. My eye is drawn towards the buy-side liquidity above these relatively equal highs and into this CB to be my first drawn liquidity. Notice that these relatively equal highs stepped into this CB, but they did not reprice all the way into the high of this CB. That means that there's still an inefficiency left, which the market has to be repriced into at a later point in time. That was my thought process. At this point, what I see is the following. I see that we have now closed above these two CBs on the left here. So in my mind, I'm extending those CBs to the right. I do not want to see the market displace below them again moving forward. This up-close candle holds significance to me as well, because it was a big up-close candle which formed inside of this CB, and we've now closed above it, so I want to see this price range function as support. As you can see, I might have been a bit overzealous with my target, since my full pool target would be the launch cycle high, but due to the fact that the high time frame order flow was bearish, I already knew that I would have to take partials rather aggressively. And this is how you need to determine where to take partials, by the way. If you're trading in line with the high time frame order flow, you try to anticipate us to draw all the way to the opposing side of the range. If you're trading against the high time frame order flow, you anticipate us to at least reach 50% of the range, and how we treat that level will be crucial in determining whether or not we are likely going to continue higher. At this point, my mind is drawn, by the way, to this candle right here. I do not want to see the market trade below this candle's low, because this candle's low already tapped into this BC. So keep that in mind. Extend this wick to the right. Monitor to see how we are going to react of that. I like the fact that we had this big sequence of down close candles which delivered lower. That right there is manipulation which is taking place. It's engineering new buys liquidity above these highs here. Because retail-minded traders will look at that and think, oh, look, we're dropping lower aggressively, we found resistance, we now need to go lower. We of course know that the opposing is true, and this is manipulation lower to engineer new buys liquidity to then draw higher. Here you can see that we're trading above these relatively equal highs now, and that's why I decided to take a partial. I was monitoring to see whether or not we would expand and spool towards the upside now, to see whether or not we would continue drawing towards that other side of the range. But in my mind, like I mentioned, I was already preparing myself for the fact that we could potentially just chop around from here and not reach that objective. Preferably, I would like to see that objective get reached, but in my mind, I'm okay with the fact that it might not deliver. At this point, I'm simply waiting to see, okay, are we going to reject these relatively equal highs? Meaning, are we going to show signs of wanting to now return back into the range of this low to this high? Or are we going to in fact continue higher? At this point, it's a waiting game, and I'm actively monitoring to see whether or not we're going to offer that sell side delivery next, or if we're going to continue that bullish order flow. Notice that my stop gets drilled to this low. The reason why my stop gets drilled to this low is due to the following. This low set up the final expansion into the buy side liquidity target of these relatively equal highs. And therefore there's absolutely no scenario possible in which this low should be made jacked unless order flow is changing, unless we're likely going to retrace deeper. I'm really liking the fact that we had these down close candles towards the downside, and that we're now seeing the market begin to show signs of wanting to expand above them. But here's something occurs. Notice that we are beginning to reject this high. Notice that we're not closing strongly above it. That's a warning sign, because IPDA is having a hard time with displacing above this CB in here. And that right there is an algorithmic signature that shows that the tide might be turning. So in my mind, I'm preparing myself to take another partial. And here I've decided to take one more partial, because I was not happy with the fact that we rejected this high. Where it seemed like we would expand above those highs, you can see that we're rejecting them. Notice that the bodies here are lower than these bodies, whilst the wick goes above it. When I then saw this expansion higher, in my mind I was like, okay, it's either going to run now, or the overall idea is completely invalidated and we're not even going to see one more leg higher, and instead probably roll over. Look, you might think, why did you not take more contracts off at the beginning drawing liquidity, at the beginning of your draw being met? And That's a completely fair statement. However, to me, what was the thought process was the fact that we were likely going to see more of an expansion above these relatively equal highs. But the fact that we're seeing this very lethargic price action, to me, is the warning sign of that maybe not occurring. Here we can see a closure above this high right here, but notice that we're not beginning to see signs of continuation. Instead, we see a rejection taking place. Time was running out as well since the macro window has ended, and when the macro does not deliver, you know you need to be very aggressive with your stop management. I trailed my stop, and eventually my trailed stop gets hit, as you can see. What I want you to learn from this execution is the following. I hope that you have gotten a great insight when it comes to the overall trade management and overall management of the fact that the idea which I had established did not play out. Meaning I was anticipating the market to continue higher and utilizing this CB as an inversion value gap, but the signs were not present that it would occur, meaning we saw a rejection of that CB. And when that occurs, you need to be very aggressive with your trade management. And what eventually occurred was the following. We retraced all the way back into the entry, and then during the next macro window, we expanded. I personally was not behind the charts anymore, so that was rather unfortunate, but eventually the market did deliver towards the drawn liquidity of at least this CB into a premium of the range from this high to that low. So that was good to see, and that is definitely delivery worth logging. However, whenever the price action does not deliver, you need to be content with that. You need to say, okay, I saw a move, I anticipated it to take place, I got my profits, I'm done. Simple as that. Let us now take a look at the intermarket relationship between Nasdaq and ES in this overall delivery, because I have some sauce to share with you, some advanced IPTA insights. Here we're on the 1 minute chart of both Nasdaq as ES. Nasdaq being on the left and ES being on the right. What I want you to see first of all is the following. I shared with you that there was a Kraken correlation inside of the low formation which occurred at 1:22 p.m. Now, what I want you to do is I want you to pay attention to this delivery here on Nasdaq and this delivery on ES. And I want you to just pause this lecture for a moment and try to tell me what you see. I know that some of you just don't want to pause the lectures because you're like, I don't need to pause it, just get to the point, give me the answer. But trust me, you need to pause the recordings because that's how you learn, because then you can see and test for yourself whether or not you know what I'm going to point at. What I want you to see first of all is that Nasdaq right here creates a higher low on the wicks. Notice that ES, however, creates a lower low here. It's a very tiny SMT, it's a 1 minute SMT, but it was enough for the overall buy program to take place. Now, let's take a look at the next significant low. The next significant low that immediately pops out to me was this low formation, which formed just right before a macro window. What I want you to see is the following. I want you to see how there's body SMT here, meaning where there's SMT here on the wicks inside of the initial low formation, there's SMT on the bodies here on the second key low formation, which formed right in advance of a macro window. Where you can see that if you would take the wicks off here on Nasdaq, you would see that Nasdaq created higher lows on the bodies, whilst ES created lower lows on the bodies. Do you see that there's a Kraken correlation there? You need to pay close attention because these are the fine details. If you then take a look at the next low formation, the low where I entered off, yep, you're getting some real sauce here. When looking at entries, I look at SMT, meaning preferably I want to see some form of SMT take place inside of the candle that I'm trying to enter. Meaning I try to enter inside of this BC. That was my overall thought process. Why? Because this BC was in a discount from the low to high of this range. The low which formed right in advance of our macro window and which set up this run higher. Waited for a retracement to take place, and inside of that BC I was monitoring the following signatures. I was monitoring to see whether or not there would be an SMT that would form between Nasdaq and ES. What do you know? If you pay attention to Nasdaq's delivery, you can see the following. you can see that Nasdaq formed the low right here. If you pay attention to ES, however, you can see that ES formed the low prior. Do you see that? There's a cracking correlation here between this low and this low versus Nasdaq. Do you see it? I did not want to annotate this because I wanted you to focally hear what I'm saying to you and then try to be able to work it for yourself. So meaning, I want you to go into your own charts and I want you to mark up these things. And I can already hear you say, okay, well, what about the SMT that took place relative to the imbalance? Yep, that was another form of SMT. Where Nasdaq retraced all the way into this BC, ES did not. Notice that ES never reached its respective BC here. What does that mean? That means that I just showcased to you 3 forms of SMT within this one delivery. I can already here think, when is this SMT significant? When is that SMT significant? Look, whenever we're anticipating a low formation, meaning whenever we're anticipating that a fractal smart money reversal is going to form, we will be looking at the following signatures. We will be paying attention to both the wicks as the bodies, because it's possible that if the wicks do not show SMT, then the SMT is probably between the bodies. And if there's no SMT between the bodies neither, then you know that there's no SMT and it's a low probability environment. But if there is SMT present, and it can be such a small SMT as I'm showing to you here, when it is the case, what I need you to understand is the following. I need you to understand that that right there shows that the time is right for a turning point to form and the opposing side of delivery to take place. This was a rather advanced part of this overall episode. I hope that you found it insightful, and during the upcoming episodes of this series, I will touch more on such SMTs and when I apply body SMT and when I apply wick SMT. Be safe.